What if I told you that the real cost of a bad investment could be more than just a loss of money? It could be the destruction of your entire financial future. Sounds dramatic? Well, it's true. Many beginners fall for investment traps because they don't know what warning signs to look for. So, how do you avoid falling victim to scams and risky investments that promise big returns but deliver nothing? In today's video, we're going to cover 5 critical investment red flags that every beginner needs to be aware of and how to steer clear of them. If you're serious about protecting your hard-earned money and building wealth the smart way, then this video is a must-watch. Let's dive right in. Red flag number 1, the promise of guaranteed high returns. Let's face it, who doesn't love the idea of a quick, guaranteed return on their investment? But here's the hard truth, if it sounds too good to be true, it probably is. Investment opportunities that promise you high returns with no risk are the first red flags you should look for. Think about it, legitimate investments come with risks. There is no such thing as an investment that will consistently guarantee high returns without any risk. If someone promises you 30% returns every month or claims they have a foolproof system to make you rich quickly, run in the opposite direction. The reality is, high returns are often tied to high risk, and anyone who tells you otherwise is likely trying to deceive you. The key here is to remember that real wealth takes time. Building wealth is a gradual process, and while some investments might offer high returns, they also come with risk. Always ask, how does this investment work? Where is the money coming from? If the answer doesn't make sense, then it's likely a scam. Don't let the excitement of fast money cloud your judgment. It's tempting to dream about what you can buy with the profits, but remember, true investments require patience. Red flag 2, lack of transparency. One of the most obvious warning signs of a scam investment is lack of transparency. If the investment opportunity you're looking at seems too secretive or complicated, it's time to be cautious. Good investments are transparent and easy to understand. If someone's telling you that you can't ask too many questions or if they're vague about the details, that's a major red flag. When considering an investment, always ask for clear documentation. Check to see if the platform or company is registered with the relevant regulatory bodies like the Securities and Exchange Commission, SEC, or similar organizations in your country. If they can't provide clear information about their track record, business model, or legal standing, this is a huge warning sign. Scammers often try to hide their true operations behind vague terms and complicated jargon. If they can't explain exactly how the investment works, it's likely too risky, or worse, fraudulent. Legitimate companies welcome scrutiny and provide you with the information you need to make informed decisions. If they're avoiding questions or not offering clear answers, don't trust them with your money. Transparency is essential in any investment. If it's not transparent, walk away. Without transparency, there's no way to understand how your money is being managed or what risks you're actually taking on. Red flag 3, high-pressure sales tactics. Have you ever been pressured into making a decision quickly? Maybe someone told you, act now or you'll miss out on this opportunity forever. If you've encountered this, then you've seen one of the biggest red flags in the world of investments, high-pressure sales tactics. Scammers know that if they push you into making a decision quickly, you're less likely to ask the right questions and do your due diligence. Here's the rule, never make an investment decision when you feel rushed. Legitimate investments won't require you to act on impulse. If you feel like someone is pushing you to make a decision right away, that's a clear sign that you need to slow down and reassess. Take your time to research, ask questions, and gather all the facts before committing any money. Rushed decisions are often made out of fear of missing out, but this is when your guard should be the highest. Pressure is often used by fraudsters to get you to hand over money before you have a chance to think clearly or check the validity of their claims. If an opportunity truly is as good as they say, it will still be available tomorrow. Don't let anyone rush you into making a decision you'll regret later. Take a deep breath, step back, and always trust your gut when it tells you something feels off. Red flag 4, too good to be true testimonials and reviews. What's the first thing we do when we're considering an investment? Check reviews and testimonials, right? But here's the problem, fake reviews are rampant, and scammers use them to lure in unsuspecting investors. Be cautious of any platform or company that has over-the-top testimonials from people you don't know or can't verify. It's easy for scammers to create fake profiles or hire actors to share their success stories, but the key is to dig deeper. When checking testimonials, don't just take them at face value. Look for verifiable results or independent reviews from trusted sources. Scammers often pay for positive reviews, and you can typically spot them by checking the timeline of reviews. Are they all posted at the same time? Are they overly glowing and unreasonably positive? Check whether the people in the testimonials are real individuals, look them up on social media, search for their profiles, and see if their stories check out. Fake testimonials are often exaggerated or completely fabricated, so it's vital to verify them before trusting anything the platform says. And if you can't find proof of real results or independent reviews, it's best to avoid investing your money. Be extra cautious with new platforms that don't have an established reputation in the market. Red flag 5, lack of regulation and legal protections. The lack of regulation is another serious red flag. Investment scams often operate outside the law, and their platforms are not regulated by official bodies. If a company or investment platform doesn't adhere to regulations set by authorities like the Securities and Exchange Commission, SEC, or local financial regulators, then you're opening yourself up to serious risk. Before investing, make sure the company is registered with the appropriate regulatory bodies in your country. This ensures that the company operates within the bounds of the law and that your investment is protected. If a company is not regulated, or if they discourage you from checking their credentials, that's a strong indication that they might be running a scam. Investing in regulated markets offers a layer of legal protection. If things go wrong, there are legal resources that can be pursued. Without that regulation, you could lose everything and have no one to turn to for help. Never underestimate the importance of legal protections when making an investment. And if you can't verify their status with regulatory authorities, consider it a deal breaker and look for other, more secure opportunities. Investing can be an exciting and rewarding way to build wealth, but it's crucial to stay vigilant and aware of the red flags that can lead you into dangerous territory. Greed, lack of transparency, pressure tactics, fake testimonials, and the absence of regulation are all signs that something isn't right, and avoiding these traps can save you from losing everything. If you found this video helpful and want to keep learning about how to invest wisely, make sure to hit the like button, share this video with friends who might need it, and subscribe to the channel. Don't forget to turn on post notifications so you never miss any video. Also, check the video description for tools and resources that can help you manage your finances and investments safely. Thanks for watching, and remember, knowledge is your best investment.